Well, good morning, everyone. Thomas Montgomery, IIMFL and Smart Money Alliance. It's a pleasure to visit with you this morning. It's a beautiful Monday morning, July 26, 2021. We get together with our distribution partners most weekday mornings at this time, right around 8 o'clock Central, often starting about a minute before. On these daily trainings, our goal is to provide strategies, techniques, tips, updates, and so forth. Today, what we're going to do is build off of the training agenda. So we announced about a week ago this business credit and financing training workshop that if you would like to teach in your community, you could do so. And we had a whole session where we went through the agenda. We have a train the trainer session that will get you up to speed and be able to teach this. You can teach it at churches, apartment complexes, chambers of commerce, community centers, trade associations, wherever you'd like. It can be taught in person or online. Certainly we like the in-person best, but you'd be able to teach that. You set the price that you want for the attendees, and the attendees get a full manual. This here stops with just the agenda on page 3, but it's about a 50-page booklet that they get. So that's not the point today. We've already covered that. The point today is we've just released a new terminology reference piece that we'll be covering in the Train the Trainer training, and probably is something that you'll want to include if you're going to be teaching that workshop. Now, again, this workshop is normally a full day workshop, normally in person. You're normally charging, again, it's up to you, normally charging $100 to a couple $100 per person. So it's not get rich quick, but if you had 20 people and you're charging, let's say $200 a piece, extra $4,000 for the day. And then from that, you have a really educated prospect pool. Many of them will very well likely move on into the Access to Capital program. But again, our focus today is to go through the release of this new reference piece that is typically going to be used with the workshop. Now, I understand this can be maybe a little redundant, maybe a little elementary for a lot of you. Maybe it's like the ABCs, you know them forwards and backwards. But what we have to remember is financial literacy is an important part of what we do. And just because you're very smart and you know a lot of this, a lot of small business owners don't. So with that being said, let's go through the terminology reference sheet here. So I'll make this a little bit larger so it's easier for us to navigate through. So business finance terms. The first business finance term is credit line hybrid. Well, what is that? It is a type of business funding where a finance source helps secure multiple credit lines, revolving, kind of like lines of credit. Typically, they have 0% interest rates initially, and there's cash out capabilities. This is what we use when we're doing a fast track business credit build. Reports under the EIN, doesn't report under the personal credit, but it does report to Dun & Bradstreet, Experian Business, Equifax Business, so forth. So credit line hybrid is the first finance term. Revenue cash advances, kind of love them or hate them, but they're a type of business financing where the lending decision is based upon how you manage your bank accounts. Well, what you and I know are the 3 C's, right? If we're going to help someone borrow money, accrue debt, and there's other ways to get capital, but if we're going to focus on debt, you have to have at least one of the 3 C's: credit, cash flow, collateral. Here, this is based upon cash flow activity going into the bank accounts. Purchase order loans is the next term. And this is a type of business where, a type of financing, where you can get the money you need to fulfill purchase orders. So some clients, well, let's step back. Some businesses will kind of pre-sell to their client so they know that they have revenue coming in, but they've almost pre-sold it. They've not generated the product or service yet. I really like this, and a lot of times this is called ROBS, which is a terrible acronym, but roll over for business startups. But the 401k and IRA financing is a type of business financing where we can use our 401k or IRA as collateral to get the loan. And in many cases, you're not actually using the 401k or IRA, it's just the collateral. So it doesn't interrupt it, doesn't mean you have to cash out, doesn't mean that you're making changes to the retirement account. It's just using that as collateral, right? 3Cs. This is a type of collateralized loans. And you have a lot of people that will come from corporate America and looking to get into entrepreneurship, and they'll have enough in their 401k that would allow us to do this. Securities-based financing, I made reference to this late last week, and there's an article in the Wall Street Journal within the past week or so talking about this is just the rage right now. Securities-based financing is a type of financing where you use stocks or bonds as collateral to get a loan or a credit line with low interest rates. So again, doesn't require you to sell the collateral, you're just pledging the collateral. Again, for those of you just joining us, what we're doing is we talked about that we're doing more with workshops, and we're hoping that you'll teach the workshop in your community. We've covered the agenda before. We just briefly summarized it today, but we just released today this new terminology checklist or glossary that we're going through that you may very well want to address during your day-long workshop as you're helping prepare clients for funding. Okay, so moving on down. Fundbox is a specific company, and we've used it. I mean, it works well. It's almost like a line of credit whereby you get approved for a certain amount, and then whenever you'd like, you can pull from it. And it usually deposits the next day, the next business day. We've had really good success with it, both internally using it as we've grown, but also with clients. So that's another important type of financing. And then we have artificial intelligence financing. It's where lenders use AI to obtain documents electronically and quickly to evaluate those. So what we're seeing is more and more automation in loan approvals. So like one of the things that we teach, and you all know this inside and out, is we tell everyone, do not be self-employed. Do not be self-employed. Own your own business, of course, but set yourself up on payroll and pull a W-2 direct deposit typically every Friday. So the point is that's an example of a good business practice that you and I are out teaching about, and we'll cover this in the workshop as we're training people. But the point here is that increasingly lenders are using automation. So for example, like it used to be paycheck stubs. Well, show me your paycheck stubs. Hardly ever do they ask for paycheck stubs anymore because there's more and more artificial intelligence financing that's automating that. Okay, so these were some terms about business finance. Now we're going to go over and get into some terms regarding business credit. LexisNexis. LexisNexis is a report that's extremely detailed consumer report used by sources including law enforcement, insurance providers, government agencies, and more. So for example, most successful credit repair initiatives don't just deal with the three main bureaus, Experian, Equifax, and TransUnion. They typically go all the way to LexisNexis. And by getting things changed at LexisNexis, then that typically makes it much easier to be able to get the bureaus to update information. You probably know that, but I tell you, as you're teaching a group of people the workshop, most probably have not even heard of LexisNexis. Then, of course, we all have a LexisNexis score. You know yours. Most clients don't know theirs. So it's a range from 501 to 900 used by credit issuers, lenders, insurance providers, and others. And so this is important too for those of you that are writing key person policies, because credit makes a difference in being able to get life insurance. Did you know that? Your credit score can impact your ability to get life insurance. Next term is business legitimacy. All lenders and credit issuers have secret, unpublished business legitimacy standards you must meet. Now, what's interesting is different lenders have different requirements, and so it's not a one-size-fits-all approach. But there's always going to be some sort of criteria they use to decide, do they want to loan you money or not, or loan your client money or not. So half the battle is what we're doing by gathering data from the client to see where they're legitimate, where they're credible, what they have, what their mitigating circumstances are, so we can guide them to the right type of financing. Some industries are considered high-risk industries. Lenders and credit issuers keep internal list of high-risk industries which face more scrutiny when getting financed. So like the porn industry, gambling industries are examples of high-risk industries. Does it mean they're illegal? Not necessarily, but some industries are considered higher risk than others. Virtual addresses, and I think we've all seen the flow. So it used to be, well, a lot of small businesses don't know any different, so they'll start their small business using their home address. Well, is that a good idea or bad? That's a very bad decision, especially if we're trying to build business credit and get funding under the EIN, because at that point we've created no separation between ourselves and our business because we both are using the same address. Well, does that mean we have to go out and buy a commercial office building? No. Does it mean we have to go out and lease office space? Well, no. I mean, and that would be ideal, I guess, to have true unique commercial address, but virtual addresses are those that you can get through WeWork and Regus and so forth. And so you're paying a smaller fee, often $100, $200 a month, to have legal access to a commercial address. The key there on the virtual address, though, is if it's a shared address, like Regus, R-E-G-U-S, good company. But typically they'll go in and they'll lease a whole floor or part of a floor in an office building, and let's call it Suite 400. Well, if you sign a virtual address contract with them, can you use that address in Suite 400 as yours? Yes, you can, legally and ethically. But how many other people are also using Suite 400? Often dozens or hundreds or even thousands of other businesses have the same address. So of course that does not carry the same weight as having a unique address. 411 listing for credibility. This is like directory assistance. Many lenders and credit issuers deem a business to be credible and legitimate only if the business phone number is listed with 411. So that is another tip that you'll teach them about when you take them through the workshop and teaching them how to position their business to be credible, and that was under business phone there. All right, bank ratings is a great one, something that you and I know inside and out. You know what your bank rating is, but I'll tell you what, the average small business does not know what their bank rating is, and that is the average daily balance over the past 90 days expressed as a high, medium, or low. So that is some direct information that we teach about, that you'll be teaching about, I hope, in this workshop, because it makes a difference what your bank rating is. But you can easily control it, right? It's not something that you're just assigned and left with. Business identification numbers. So business identification numbers are numbers such as the BIN from Experian and DUNS from D&B, Dun & Bradstreet, that the business reporting agencies assign. So you could argue it's kind of the analogy of your social security number for a person. Business credit score risk. The business credit score risk is the primary business credit score offered by Equifax. So there's 3 primary business credit reporting agencies: Dun & Bradstreet, Equifax Commercial, and Experian Business or Experian Commercial. And I know Experian and Equifax both deal on the personal side as well, but keep those very distinct, different scores, One sets under the Social Security number, others under the EIN. They work much differently. Interesting business failure score. Each of the three major reporting agencies offer a type of business failure score that depicts your business's risk of failing in the next 12 months. Isn't that interesting? Supplier evaluation risk rating, the SER for short, is a credit score offered by Dun & Bradstreet that predicts the likelihood that a supplier will cease operations and become inactive. Credit limit recommendations, and this is really fun, and we've done trainings on this, how quickly we can manipulate, legally and ethically, we can manipulate and increase the credit limit recommendation of a business. But the technical definition is each of the major reporting agencies, we're talking about Dun & Bradstreet, Experian Business, and Equifax Commercial, provide a credit limit recommendation of how much credit they recommend you be issued. Through the Access to Capital program, we're making really a more concerted effort of building quickly the credit limit recommendation of the clients. The delinquency score. The delinquency scores are scores offered by the business reporting agencies that predict a likelihood your business will go delinquent in the next 12 months. Now that's different here. There's slight variations. So we had the business failure score up here. Now we're on the delinquency score. This is more of the business closing down. This is just us not being able to pay our bills on time. The Entellus score, it's what Experian assigns. So Dun & Bradstreet gives you a Paydex score, Experian Business or Experian Commercial gives you an Entellus score. D&B rating is a credit score issued by D&B to evaluate the credit worthiness of a business considering the financial data and number of employees. There's a lot we can do, again, legally and ethically, to manipulate the D&B rating. And what's important to know is that we need to get 4, not 3, not 2, not 1, but 4 trade lines reporting through Dun & Bradstreet to be able to optimize our Dun & Bradstreet score, but we can do that very quickly. Delinquency predictor score, this is again from Dun & Bradstreet, predicts the likelihood that your business will go seriously delinquent on your debts in the next 12 months. Financial stability risk score is Experian's score. So we were on Dun & Bradstreet a moment ago, now we're on Experian. So it's the risk of failing over the next 12 months from Experian versus Dun & Bradstreet. Fixing business credit. Fixing business credit has to do with disputing inaccurate accounts on your business credit reports with the business reporting agencies. Vendor credit or trade credit is a type of credit issued by trade vendors and is typically used to help you establish initial business credit. We really want to have a more concerted effort. Those of you that are white label partners, and we've got several of you that just joined over the weekend, so welcome aboard, new white label partners. We really want to get to show value and show results to clients more quickly in building their business credit profiles. So from the time that they submit their refundable deposit, we're going to really dig into building their business credit profile quickly going forward. And then lastly, we have the business credit tiers. And what this is saying is dependent upon how much business credit you have now, kind of determines what our next steps should be. So I know this was probably highly redundant for most of you because you know this and you're probably already out teaching it. But I'm promising you the average small business owner doesn't have this knowledge. And so I really hope that many of you, well, I know many of you have already registered to come in August 20th, where we're doing the Train the Trainer workshop. We have a few seats left if you're interested in doing that. But regardless of that, we need to really consider building our sales funnel through financial literacy, through education. And the business credit and financing training workshop that we rolled out covers just some crucial information. And again, today's topic was to let you know this newly released terminology listing that we're including in the workshop. Okay, so with that being said, who has questions on the workshop overall, or coming in for the Train the Trainer that we're doing on August 20th, or specifically the new almost glossary that we just put together here? Who has questions? All right, so first question Dion asked, when it comes to your Dun & Bradstreet score, I thought it didn't matter how many lines of credit you have. No. Dun & Bradstreet's not going to generate a Paydex score until you have at least 4 trade lines reporting. Until then, you'll have no score. That's different than Experian Business or Commercial and Equifax. But for Dun & Bradstreet, they don't start generating a score until you have 4 trade lines reporting. That's their algorithm. It's not my preference. It's not something that you or I can change. That's the way that works, but that's fine. What we're going to do, Dion, for your white label access to capital or capital ready clients is we want to help them get their first 5 trade lines, if not added, at least started in the process of adding in their first 30 days. We want to continue to create more and more value more quickly for clients that are coming in. Thank you, Dion, for that point of clarification. Who else has any questions on the Train the Trainer training we have coming up on August 20th? We have a few more seats if you'd like to join us for that. And then if you have any questions on this terminology, which is kind of a supplement to the workshop that's just got released. Well, this is the release, just got released today. Not necessarily meant to be like a marketing piece that you would take out, but again, our mindset, and I know not all of you have this mindset, but our goal is to improve financial literacy as well as increasing access to capital, because the problem is a lot of people don't know what they don't know. They don't have the money that they want to start or grow a business, but they're not ready for it really. They're not positioned well. And I think that's a very important role that we provide. All right, so Peggy asked if this training is on the website. No. So we're having the Train the Trainer on August 20th. I assume we'll start having on a monthly basis. So many of you are coming in to meet us, spend the day together, do the Train the Trainer workshop. So you can go teach this. And then this information we just went through is just additional content that we'll cover in the Train the Trainer. And then that most likely that you'll want to share with your participants. The Train the Trainer workshop on August 20th is $299, I'm being asked, and that covers our cost of getting the room, getting materials, providing you lunch. Okay, let's see here. We've got a question. As a new white label partner, what's the average amount that the white label partners are charging? Well, that's a great point. So Dion, as you're out setting up this workshop, you could certainly teach this full day course for free and cast a very wide net. So that's an option. Others of you are charging a small amount, kind of a subsidized amount, $99. And again, if you have 20 people, you make $2,000. It's fine. Many of these people will go ahead and convert and become access to capital clients or capital ready clients. And then others of you are choosing a higher price point for the workshop. So it's really up to you. I think there's those 3 different pricing models that you can go with: the free, the low, or the normal. And it's just dependent upon your preference, Dion. You set the price for how much you want to charge for the workshops. And so Peggy's asking, yeah, so a lot of us are still out doing the normal 1-hour workshop. That's not changed, Peggy. What we're talking about here is the full day business credit and financing workshop, where we're going through a ton of information to really prepare them. This is something that you can really get banks behind, churches behind, key influencers, because again, almost every small business owner wants and needs more money to start or grow their business. That's a given. But what you got to realize, you and I realize, but they often don't, is they often don't know what they need to know to be successful. So even if we got them $100,000, what's the probability that they could use it wisely? So while we don't force financial literacy on people, if they just want to come into the access to capital and they don't want to go through the workshop, that's just fine. But certainly the more they know, the better off they'll be, the more successful statistically that they'll be. Okay. Who else has any other questions on the Train the Trainer workshop, which is coming up August 20th? We have a few seats remaining for that. That is in person. We go from 9 a.m. to 4 p.m. on Friday, August 20th. And what we'll learn at that workshop is this material, as well as we'll go through the full 50-page guide. And then the goal would be that you would go back to your home market and start teaching this, again, through churches and chambers and otherwise. You can charge what you'd like or do it for free. And so it's good income, but above and beyond that, it creates a sales funnel for your access to capital or capital ready. And today we went through the newly released terminology list. Again, probably old hat to you all, but for a lot of small businesses, these are key terms that they're just not familiar with. No one's ever stopped to teach them this, and it helps them put it into perspective. We go a lot deeper, of course, as we go through the full workshop agenda. Any other questions, comments, concerns today before we end the training? All right. If you're interested in coming to the Train the Trainer workshop, just email me, thomas@iimfl.org or thomas@smartmoneyalliance.org, whichever you prefer. And then we can get you registered for August 20th. A number of you are coming and bringing, I don't want to say bringing a guest, but bringing an associate, a business partner, a spouse, a significant other. And so that is fine as well. All right. Well, thanks, everyone. We'll see you back tomorrow morning. Have a great day. Good to talk to you.